Welcome. So what is the purpose of these videos? The purpose is to prove that one good trading strategy will appear over and over again in the markets. But to have three that appear over and over again, that's more than anyone can ask for. It's more trading opportunities than you can imagine. Let me continue to prove this to you. Then you can continue to prove it to yourself. And then you will be amazingly successful. Now let's go into the lesson. One of the things that's always important to remember is that our trade setup is either in the market or it's not. And it's very important not to force it. And as we look at Apple, we want to point this out. You can see that trading strategy number one, MACD divergence, was clearly here. Price went higher, the MACD was lower, and in this instance, it ended up only being a small retracement. Then we had an even bigger instance and had nested divergence from this point to this point. As you can see, price went higher, and the MACD went lower, and then we had the big move. Is there any way to tell a difference when we're going to have a shorter retracement move like this, or maybe a little bit more reversal? And the reason we say reversal is in this instance, you can see that the MACD did not go across the center line. And here it does. So anytime the MACD crosses over the center line, like we can see right in here, that is when we say that was a reversal, not just a weakening in the trend. And that helps us to see that a retracement is a weakening in the trend before another move up. And over here, it became a reversal. It crossed over, and we had a much bigger move down. So whether it's Apple, a stock, or any kind of currency or commodity, those principles go across all markets and how the MACD and MACD divergence is working. And for one more lesson today, we're going to look at the Aussie Kiwi. Now the MACD was lower, as you can see here. Price looks like it slightly went a little bit higher here. And this is one of those instances where you say, well, it's kind of close, so I'm not going to look at this as a valid instance of trading strategy number one, MACD divergence. And this is close enough in here where some brokers may be just at the same height, some brokers' charts may be a little bit lower, and you may be comfortable waiting for a very clear distinction of a higher high with the MACD being lower. Now, what's important too to note is, remember, the blue line is the MACD line. The MACD line does not have to go back over its trigger line for there to be MACD divergence. It just has to be lower as price went higher. It doesn't actually have to cross over its trigger line. Today's lesson isn't about going around and looking around at the markets and identifying different versions of MACD divergence as it would appear in the market. Today, we discuss some of the finer nuances of MACD divergence. That's what these live market training sessions are for. That this is a trading strategy that has appeared for decades in the market. And usually the reason most people fail at trading it is because they don't know how. So these lessons, and as well as the 120 lessons in the full course, should definitely help to make this one of the successful trading strategies in your portfolio. Well, that's going to bring this session to a wrap. But do me a favor and do a lot of other people a favor. Help us change the way the world learns to trade and understand the financial markets. Let's simplify it down to just a few things we need to know to follow to be able to make money and protect our capital. If you haven't already, please visit our Facebook page and give us a like there. Search for our channel on YouTube, Train Your Brain Trading, and watch for the continuous content we continue to put there. Thanks for spending some time in this session with me today. And if you can, promote these materials so that together we can change the way the world trades.